What's up traders, Amber Gwendolyn here with the Traders Corner, bringing you guys another banging video. Today we're not actually going to be talking about a trade breakdown. We are going to be going in depth on some market maker buy models, market maker sell models that formed in the market. The day that we are going to be covering is Friday, the 10th of February 2023. Like I said, I cover both the NASDAQ and the S&P for my morning forecast and what I was looking for potentially for how the daily template will unfold. The topics that we're going to cover are market maker buy models and sell models with like some advanced kind of understanding of them, as well as how to understand what's going on with the S&P divergence between the indices. If you guys are enjoying the videos, be sure to give a thumbs up, drop a comment if you're new and you want to say hello, and also consider subscribing if you're a trader or investor, as we make videos on these topics fairly regularly. Now, without further ado, let's hop on into the video.
Alright, so what we're watching is this offset accumulation followed by this bullish engulfing. Now, wondering if this bullish engulfing fails, it would come lower, because we do have relative equal lows here, we have relative equal highs here, and that just makes kind of like the entire day kind of like iffy. So I want to let this news unfold at 10 a.m. And then see maybe where we can go from there. We are struggling with the previous day's low, finding some resistance at it. However, I think there's a good, strong possibility that we're able to actually break through this resistance at the previous day's low and continue up towards 12.426, close the previous day's, the gap from the previous day's cash close, and then push ultimately above these relative equal high here at around 12.446. So price is above previous day's low, and it's trading above the 50 EMA. So let's see if we get a sweep below here at 40.70 and then a push higher. So we've got relative equal highs here, little liquidity sweep, but like essentially relative equal highs in the previous day's cash close. Like I said, it can be a tricky session today, so I'm not like super hard on trying to get into a trade.
And we're back. So let's take a look at what actually happened. So we did get this offset accumulation here and did pull into this fair value gap, held it, and we pushed deeper into this M5 order block as well, and held this little bit of a higher low here. And then we pushed back towards the previous day's cash close, back towards the market maker buy model initial consolidation high, but we failed to get to that level, and we'll talk about that in a little bit when I cover the MES, the S&P. Then we ended up breaking down here and creating this sort of balanced price range here, and I believe that there's an M1 fair value gap located within this M5 fair value gap as well to act as a level of resistance, and then completion of the market maker sell model. Now looking at MES at the S&P, what I was looking for was nice. Alright, so what I was looking for was a run on this sell side liquidity here, resting below 40.70. We just barely tagged that sell side liquidity for a little offset accumulation on this instrument as well. Price holds the M550 EMA, and then we push up and actually take out those relative equal highs and fully complete the market maker buy model. Now in my trading, I have essentially like two types of completion of market maker buy models, right? So you can complete a market maker buy model with bullish conditions, in which you're gonna more likely to take out the high. And then you can complete a market maker model in bearish conditions, market maker buy model in bearish conditions, where you're actually going to react to either an FEG or an order block established within that level. And that's pretty much what we got here. So we had S&P divergence as, excuse me, as the NASDAQ tried to approach the previous day's cash close and fill in the gap left over for the day, and it failed to do so. And I want to take you to this initial consolidation here where we set these relative equal lows. If we go over to MES, on the S&P, we did not set those relative equal lows. We actually had a sell side liquidity sweep here, creating offset accumulation, and then a push to the buy side. So when we came back down here, right, the anticipation wouldn't be to complete this market maker sell model, because we are now more so in bullish flow. What we did instead was this little stop run right here is where the market held the price held support right around in here. Right, because this is probably like a 30-second or a 15-second order block down in there, and that's pretty much where price held and then continued higher. And if you go over to the NASDAQ, which was the weaker market on the day, right? We ended up taking out that sell-side liquidity later, and then never failing to make really any higher highs. We used the previous day's low as a level of resistance coming into the afternoon, and then just kind of ranging about. So the forecast went as planned. Essentially what I was looking at was here we go. So a market maker buy model established here, right? And then there's a market maker sell model established here. Just have to flip this inside out. So you have two models interacting with each other. So the completion of one model is the reversal for the next model. So you have a market maker buy model, and then this initial consolidation creates the market maker sell model. You can come back up into the buy model and fail to make a higher high and take out the buy side liquidity. So then we end up taking out this relative equal lows, taking the sell side liquidity at the market maker sell model initial consolidation. So the initial consolidation for the sell model is also the smart money reversal for the buy model, right? Break above the highs, and then price comes back to the order block and pushes higher. I know it's a lot. It can be a little complex. It's a little in-depth. I think that my understanding is a little more in-depth, so I like to share more of the advanced stuff, because I feel like there's a lot of people that can tell you about market maker buy models and sell models, but they can't really tell you about how to trade them or how to anticipate the formation of them. Like trading the right side of, trading the left side of a market maker model is a little bit, takes a little bit more of advanced forecasting than trading, let's say, the right side of the market maker model. What a world, guys. I really hope that was clear. I really hope it reaches somebody and somebody's like, oh, okay, finally it clicks. Like, the market maker models, the engines of the market. So it's like, once you start seeing them once you see them, you can't unsee them, and then you can start to put them into pieces together to kind of shape the different levels, the different legs of price, if that makes sense. If you want any more clarity, or if you like the video, be sure to give it a thumbs up. Drop a comment down below if you have any questions, comments, concerns. And until next time, I'll catch you guys in the next video. Take care.